We are recording. I will give you the, right. You're the pilot.
No problem. Well, what I'll do is I'll bring up the slides and get this all organised.
Perfect, beautiful. I just wanted to, in the meantime, I'll go and just brief our audience on Facebook as well. In the meantime, we set it up. G'day guys, this is Jazz from Jazz Real Estate EV Group in Point Cook. I hope you guys are doing great. I've got with me today is our amazing Kimberly from BMT Quantity Surveyors talking about all things tax depreciation for investors or people who are looking to buy investment properties, who've got investment properties, or who might be missing out on a lot they could claim and put more money back in their pocket, especially right now when a lot of people would rather be in a position to claim as much as they can, and every bits and pieces will count in this day and age. So we thought it would be a good idea to have someone like Kimberly to have a good session and help our clients to get more educated about depreciations. Kimberly, over to you.
Excellent. Thanks, Jazz, and thanks everyone for coming along tonight. I'll be running through some slides shortly, probably about 10, 15 minutes or so, and we can definitely have some time perhaps for some questions and answers at the end. We'll jump into it. Now, what I'll do is I'm just going to hide my video just to make it a bit easier while I'm running through the slides so that we can go through that information and we'll take it from there.
Sounds good. Perfect.
Beautiful. Alrighty. So hopefully the slides should still be visible there, Jazz?
Absolutely it is.
Excellent. So just again, a quick introduction. My name's Kimberly. I've been working with BMT for about 3.5 years now. So tonight, just going to run through some information for all of your lovely landlords that are joining us, and hopefully we can answer, some questions that they might have about depreciation.
Perfect. Beautiful.
Alrighty, so what we can do is let's just start by actually explaining what property depreciation is. Essentially, as a property ages, the building and items within do wear out, and as an investor, the ATO allows you to claim this wear and tear or depreciation as an annual tax deduction. So this claim, it is made up of two components: the building structure or capital works claim, it's also known as. So that's claiming for painting, fencing, roof, kitchen cabinetry, etc. And also it's made up of the claim for the plant and equipment assets, or commonly referred to as the fixtures and fittings. So the dishwasher, hot water system, carpets, blinds, etc. So claiming depreciation in your tax return, I like to say in simple terms, it works the same sort of way as you claim other deductions in your tax return, meaning you're paying less tax and helping to increase the cash flow each year.
Absolutely. And I suppose it's really important for the properties which are negatively geared. And sometimes people feel or come up with a question, but my accountant should be on top of it. And I've seen a lot of times, Kimberly, that the accountants, with all due respect, sometimes have not got the schedule in place as well.
Yeah, look, that's definitely, we do get people coming to us, maybe they've owned the property for 3, 4, even 10 years in some cases. Unfortunately, they haven't been claiming anything. The good news is, and I will sort of cover that as well, but the reports will start from time of settlement. So if you haven't been claiming, you do have the option to hopefully recoup some missed deductions as well. So try to help out as much as we can there.
Absolutely.
So just a little history, I guess, about us here at BMT. So we are actually a nationwide quantity surveying firm, and we specialise in estimating construction costs. So there are various areas of work for a quantity surveyor within the building industry as a whole, but at BMT, we work in the third dot point there, the post-construction space. So purely preparing tax depreciation schedules. So a sort of simple way to explain what we do here, we reverse engineer the property to work out how much it would have cost to construct and preparing the tax depreciation schedule from there.
Right.
That third point I would like to highlight as well is that in order to claim depreciation in your tax return, the ATO specifically states that it is a quantity surveyor that is required to prepare the tax depreciation schedule. So whenever construction costs require estimating or apportioning, that's where we can come in to help prepare the report for you. So moving on, we can, we've covered the basics there, so we can have a look at a bit of an example now.
Now, before we jump onto the case study, Kimberly, if you don't mind me asking a question.
Certainly.
So we have a market here where there's a lot of first-time buyers who are building right now,
Yes.
or buying the investment properties off the plan.
Yeah.
How would the schedule pre-construction or post-construction would help them assessing the value? That's one question which I was asked by some people who are building investment properties now. Of course, once they have built, we can use the schedule for tax depreciations.
Yes.
Is there any other benefits for people pre-construction?
Good question. So look, that is actually a question we get a lot. We get a lot of people coming to us and maybe they've just signed the contracts on the land, when they're about to start pouring the slab and they think it's time to come to us for the report.
Right.
We're not needed until the end of the process, sort of once things are pretty much finalised and ready for tenants to move in.
Right.
It's at that point that we would come through to complete the inspection to put the report together once everything's there, because we need to see the property as it is in its finished state to capture all of the assets that are there.
Perfect. Beautiful.
Excellent. So yeah, as I said, a bit of an example here. So this is a house that 3-bedroom house purchased for $690,000, a rental yield there of about $560 a week, or just over $29,000 a year there. So in this scenario, as you touched on before there, Jazz, this is a negatively geared property, as the expenses, your insurance, mortgage fees, etc., outweigh the rental income that's coming in. So it's costing this investor just under $10,000 a year to hold on to this property. So we're having a look in a bit more detail here. Now, there is a little bit of maths, but I'll keep it nice and simple for us all this evening. This scenario on the left is what it looks like without depreciation. So the tax office still does allow you to claim that loss as a deduction. So again, using this scenario here, marginal tax bracket of 37%, you're getting about $3,600 back in your tax return. Now, this does make the property more affordable. As you can see there, it's now costing about $6,000 a year to hold on to the property instead of $10,000, but we can definitely make this situation significantly better when we do add in the depreciation claim. So we'll have a look at the impact that has now on the right. So again, a typical 3-bedroom house for a first full financial year claim, we're claiming $15,800 for the year. So this takes this investor's loss or tax deduction from just under $10,000 to $25,500 a year. So a big difference there. So then when we put that all in come tax time, you're now claiming 37% of the $25,500, seeing that you're getting just under $9,500 back, meaning it's now only costing the investor $286 for the year to hold on to that property there. So week to week, $113 difference. That's
that's a massive difference, and it actually helps a lot of people to move on into the next property portfolio, or the next property into their portfolio as well.
Exactly.
Next, look at how much are you paying out of pocket. That's your expense, and your serviceability is affected accordingly as well.
Yeah, exactly. So big difference there. Excellent. So now I know with this example, we're looking at a new house, and as you mentioned before, Jazz, a lot of your clients are looking at sort of building new homes, purchasing off the plan. But just to quickly summarize, that older established properties still can attract significant depreciation deductions.
Yes.
So on the left-hand side there, an example of a unit that was built in 2005.
Yep.
Still can attract significant deductions there, just under $6,000 for the first full year. Typically speaking, we find the average investor will hold onto the property for about 5 to 7 years. So that's just under $30,000 that this investor could be claiming for that period of time.
Yeah.
And then on the right-hand side there, a 3-bedroom house constructed in 1995. Again, first full financial year claim, just under $4,000 there, or $19,000 for 5 years of claiming. So again, still definitely substantial deductions available.
Absolutely. And I've seen a lot of times people have come to us and we've actually helped them to hold on to the property where we feel selling is not a right idea for them at this point of time. And sometimes we ask a question that why they're selling, and sometimes people do say, look, it's they've moved on into the next journey of their life, and they really don't want the property anymore, and it's going to cost them a lot more than what they expected, and they have to plan to sell.
Yep.
And first thing I normally ask them is your tax depreciation schedule in place. Are you claiming? How much are you out of pocket if you are, if the property is not positively geared? And that's the second thing I always say to people, try and see, because buying a house or a property itself is not an easy task. Selling is not hard either. Yeah. It's not an easy process, but obviously it's as you buy and research and you buy a property, you hold on to that, you nourish something over the years. It's always fruitful if you actually keep it for a long time and you build up your portfolio. That's me as an investor myself.
Yeah, excellent.
Certainly help a lot of people.
Yeah, excellent. Not a problem.
Perfect.
And again, maybe not so relevant towards your landlords, again, with I guess the properties they're focusing on. But again, just to cover, because it is a question we get a lot, depreciation can definitely still be claimed as well for commercial properties and commercial landlords. So we have a dedicated commercial team here at BMT. Now, they've worked on everything from a warehouse, an office space, to even this hemisphere's largest solar farm. So it's something that, again, we like to highlight. And interestingly, with commercial properties, it's not just the landlord, but also the tenant of commercial properties. They may be able to claim depreciation on their business fit out as well.
Yeah, exactly. Yeah.
And definitely attracting significant deductions there. Again, on the left-hand side, an office built in 2005, average first full year claim, just under $12,500 there.
Wow.
Excellent. Now, I'll go over to a couple of our most frequently asked questions. And as I've said, if I don't cover something here, we can definitely have a bit of a chat
absolutely
at the end as well, Jazz. So doesn't my accountant look after that? Now, again, sort of touched on that before there, but the ATO again states that only a quantity surveyor can estimate construction costs for depreciation purposes. Yeah. So we're working alongside your accountant in addition to your lovely property manager to help maximise your deductions come tax time each year.
Perfect. Wow. And I suppose with the investors, it's a great message, especially the ones we know in the area are moving on to the next journey of buying commercial. There are a lot of commercial developments in our area at the moment, and the ones who are looking within our portfolio as well, in our rent roll, there are a lot of investors, Kimberly, and a lot of people within our community here. They are opening up the businesses and they are buying warehouses here. And I think with the commercial perspective you've touched on, it's certainly going to benefit a lot of people, because believe it or not, sometimes, I mean, I wasn't aware that as a tenant, you can actually claim that as well as being a residential agent, not commercial.
Yeah.
It's certainly a very good benefit for a lot of people who are planning to open up a business or even do a fit out themselves.
Exactly, yeah.
Perfect.
Excellent. So then another quick question too, again, sort of touched on it a little bit perhaps earlier, but isn't the property too old? Exactly as we're saying before. No property is too old to ask the question. It's better to always know if there is a claim that you could be making rather than perhaps sitting on something that you didn't know existed and
absolutely
paying more tax than you need to. So we've done a lot of reports on older properties, and more often than not, there may have been some works completed by the previous owner that you may not know about, and you're definitely eligible to claim on those. So our opinion is it's best not to make any assumptions. You can always give us a call and we can always assess to see if there is going to be something for you to claim. And we actually have a guarantee where if we can't obtain at least double our fee worth of deductions in the first full financial year, there'll be no charge for our services. So a bit of a safety blanket there as well.
Perfect. Now, that's a really good thing. And in terms of the older property, as you said, I know some people who do not have schedules, and certainly they will be watching this webinar, and it will be certainly a good idea for them to get in touch with you guys and obviously have a discussion, a no obligation discussion.
Of course.
Also, a question which I had received from a lot of people before we logged on today, this afternoon, people were asking, if someone buys an investment property, which is, say, for an example, built in 1985, has been renovated by the previous owner just before the sale, fully renovated, new bathrooms, new kitchen, carpet, paint, light, fixtures, fittings, and or someone actually buys an older property, renovates and holds it. Now, what are the claims they can actually make on them if in the scenario one, when the owners have actually done the renovation, you've purchased a renovated property?
Excellent question. This sort of leads on to the third frequently asked question there. So I'll bring that up just so we've got that there as a point of reference. So essentially, there were some legislation changes from 2017, which is a good segue into definitely that question there, Jazz. So in that first scenario there, if you're purchasing a property and it's just been renovated by the vendor, you're able to claim the structural depreciation, or again referred to as the capital works allowance. So if there was new paint, new electrical, new kitchen cabinetry, new tiling, they've put a new roof on, all of those structural assets are able to be claimed. And although the kitchen is still brand new, because it was done by the previous owner, you're not eligible to claim on the fixtures and fittings. So the kitchen appliances, blinds, etc., because the ATO now deems those as previously used or second hand. In that second scenario, if you were to buy an older house and you do the renovations, if it's not your primary place of residence, you've purely purchased it to renovate it to get tenants in, then you're eligible to claim both that capital works allowance, but also the fixtures and fittings in that scenario. So if you install brand new fixtures and fittings, or again, also referred to as plant and equipment items, you're then entitled to claim that if you've installed it yourself for the tenant's use.
Beautiful, beautiful.
Excellent.
That's really informative. Yes, let's move on.
No problem. So just to, I guess, go over some of the other areas that we can help out with here, because as I've mentioned before, yes, here at BMT, we do purely specialize in preparing tax depreciation schedules. We can still always assist at different times throughout the ownership of your property. So if you're looking at purchasing a new investment, and you're not sure if there is going to be anything to claim, we can always provide a complimentary estimate for you if you call us in the office, or we do have some calculators on our website as well that you can play around with. And in most cases, all we need is the address, and we can quite quickly provide an estimate for you to be able to work with when you're crunching your numbers about whether you can afford that that new property or not.
New property or not. Yep, perfect. It's actually very good tool for due diligence. Due diligence for a lot of people who are just guessworking. It's actually good to have the numbers crunched and make that informed decision. And I suppose a lot of good buyers agents who I personally know, and one of them is Luke, who's actually watching us right now. He'd agree. And I suppose a lot of good buyers agents would actually encourage people to do it. And I believe, Kimberly, a lot of buyers agents will actually contact you guys as well if they are buying for their clients to get all these things.
Yeah. Exactly. Yes. It's not just clients reaching out to us directly, as you said there. It may be, their agent contacting us, collecting all of that information, so then they can present, our mutual client. Then this
Absolutely.
is what you'd be looking at if purchasing A, B, or C.
Perfect.
Yeah. Excellent. And then next, another area that we can assist with is if you make changes to the property or complete renovations, we can always help you to make sure you're maximising your claim. If you're removing any assets while doing improvements on your property, we can always update the report for you. And in addition to this, there may actually be some residual value left in the asset or assets that you're removing, which your accountant will be able to adjust using the values in our report and make sure in some cases you might be able to get an immediate deduction as opposed to claiming it over many years as you normally might. That's actually that term scrapping that we can see on that slide there.
Right.
Excellent. And again, as sort of touched on before about back claiming, if this is the first time that you are hearing about tax depreciation, the good news is our reports do show the deductions from your settlement date. So you may be eligible to claim back missed deductions from previous tax returns to, recoup if you haven't been claiming.
That's really good, isn't it?
Makes a big difference. As I said, sometimes it's a little bit upsetting. You're having a conversation with someone on the phone and you can just hear the heartbreak in their voice, but yes, we do what we can to help make sure you can definitely claim back the maximum.
It's all about being switched on and just maximizing the return on the investment, not just relying on the rent. Even if it's positively geared, there's a lot more you can do.
Exactly. Yeah, for sure. Excellent. Now, just moving on, I do want to talk about some of the other tools that we actually have available for our clients to use directly, all accessible from our website.
Right.
So I'll just touch on our My BMT Portal. So what this is, it's a custom portal that makes managing your depreciation schedules and investment property easy. You can view, update, and even download copies of existing schedules if you essentially log in and sign in and create a login there. It's a completely free portal as well that you can access. You can use it to track your property income and expenses, upload files and photos, receipts, and you can share that with your accountant. Everything is all in the one place, so it makes it nice and easy come end of financial year.
Perfect.
And there's a whole other host of information that is accessed through there. There's different market data. You can access nearby planning applications and even generate a valuation for your property as well.
I think the tool is amazing, especially with the nearby planning applications and what's happening in the area itself, the valuations. That's really handy, and obviously just having one place you can actually just dump in all the receipts and photos instead of just keeping it one place and just passing it on to your accountant or what have you. It's certainly ideal, especially with the right now people can. is there a app itself, or is it a web-based portal, Kimberly?
It's a web-based portal for now.
Sure.
We do have a few other apps I'll touch on as well, but yes,
Yeah, perfect.
full interactive experience is accessed via the website itself. Yeah.
Beautiful, beautiful, beautiful.
Excellent. And to further bit more detail about the income and expenses side of things, this is a bit of a screenshot here of how it all looks. So the income and expenses tracker has specific categories. So it's set up like the way it's laid out on the ATO and MyGov website as well, to help provide a bit of consistency across platforms, makes it nice and easy. So yeah, you can pop in anybody corporate fees, cleaning costs, insurance, everything like that to keep track of your expenditure for the year. And then you can not only use it for yourself, but easily share this information with your accountant come tax time. So makes it nice and easy. Again, keeps it all in the one spot, and you can easily stay on top of your financial position, see it all in a nice overview for the year.
Beautiful, beautiful. And Kimberly, just going out of topic, if someone owns a property and they're planning to sell after renovating it, what's the best time to do it if they want to renovate and claim things before they sell the property itself? What's the best way to do it?
So again, linking that up with the scrapping term that we talked about before. So again, if the property qualifies and they're doing renovations and then they're going to lease it out again, they would have that benefit to claim. If they simply renovated the property and sold it, there's not going to be anything to claim unless it is available for income again after the works or after the assets have been installed. Right.
Makes sense. Perfect. So that should answer Mary's question. I've just received a question from Mary.
Oh, excellent. I'm sorry, I don't think I can see any questions popping up.
No, it's actually on the text message. Mary hasn't joined, but she's watching on Facebook Live.
Excellent. I hope that helps, Mary.
Absolutely. Yeah, so it's really informative. What's the next step from here on?
Yeah. So again, something to sort of touch on before when we were talking about making those decisions, working out if you can afford that next property. Our tool Propcalc, that is something that again can be accessed from our website. It's able to calculate the true after-tax holding cost of a property. So it will autofill with some general information, the rent, purchase price, and whether it's owner occupied as well as an investment property. It will include a depreciation claim as well, and it will tell you, okay, if you're going to purchase this property, it's going to cost you this much per week, per month, per year to hold on to. So you can easily get a snapshot of what it would be to potentially purchase a property there.
Now, in terms of the Propcalc, it's a great tool, and I'm a big advocate of it. In terms of for our audience, say someone puts in a purchase price in there, or they just put a property address they would like to make an offer on, or they're intending to make an offer on, would the calculator pick up the average rental yield in that area itself, or do people need to actually put that in?
No, good question. So it is set up to autofill based on the sort of the market conditions and the location. So it will pick it up based on sort of average and median prices in the area. So if you're not certain, you can use the automatically generated figures to get an idea of what it would be. Yeah.
Makes sense. Beautiful, beautiful.
Excellent. I'm glad to hear that that you've used it. I think it's really great.
A great tool.
It's really, yeah, excellent.
Perfect.
And just quickly, a couple of other apps. Now, these are the ones I mentioned. These are all downloadable as apps. So one in particular that I think is worth mentioning is the first one there, the tax depreciation calculator. So as I said before, if you as a potential investor, you're looking at purchasing a property, you're not certain if there's going to be a depreciation claim. If you don't have time to call us in the office to talk about it over the phone, you can download this app, jump onto our website, and basically pop in some details about the property, and it will be able to provide you an estimate immediately.
Perfect. Beautiful. Beautiful.
Excellent. And again, just to quickly go over the process. So just so anyone that's listening tonight, if they are wanting to have more of a conversation with us here, this is a process that our clients experience with us. So essentially, you can just give us a call and we'll be able to discuss that with you either via email or over the phone directly. We'll just have a quick chat with you, make sure it's all going to be worthwhile, gather some basic information, and then we can get in touch with your property manager to arrange access to the property to complete the inspection. And during that inspection, that's where our trained site inspectors, they'll go through the property and ensure every deduction is found. And then back at the office, we'll collate the report itself, have that sent out to you in 5 to 7 days, and then you're good to go.
Pretty much, yeah. Beautiful. Start claiming that tax which you've not been claiming.
Excellent, yes.
Beautiful. Oh,
perfect.
Already finished.
This is my ending slide, but any questions you wanted to ask about the process slide or the inspection side of things, Jazz?
So how does it work? Say for an example, for a lot of investors, some questions were being asked if the owners or the investors need to be there at the property. Is it like many other valuations happen with the valuers normally go to the property? Because people want things to be in a most convenient way. So if the property is tenanted now, and how would be the best possible way for you guys to organize a inspection there?
Yeah, so look, in most cases, we are dealing with our client's property manager directly and then getting in contact with the tenant from there to coordinate that. It's not essential for the owner to be there, but of course, if they want to be there, then by all means, that's fine. But it's not a requirement because obviously we've been able to have that conversation with them initially, get the details we need from them directly. And a lot of the time too, we might be dealing with a client and they might live, elsewhere and not be close by. So they don't need to worry about traveling a couple of hours to meet us at the property. We can look after that part of the process for them.
Beautiful, beautiful, beautiful. Because I did speak to one of the landlords. They live in Sydney and they haven't done a schedule, and we've just taken over that property and their portfolio actually in the area. And this is one thing I asked them: when we onboard a client, they go through the checklist and they tick all the items. One of the items was obviously part of the insurances, and the question was, have you got your schedules in place? The answer was no, and they said we never got a chance to come down and organize it. I said, well, you don't really need to come down yourself, and we can get that sorted for you. So, and I think it's a really good insight, but a lot of people do feel there are some, as you said, there's no question, a silly question, just ask if you have any questions.
Yep, excellent. No, that's definitely our positioning for sure.
Perfect. Now, beautiful. Really appreciate your time, Kimberly. And anything else you would like to add, which could be of value to our clients?
I feel like we've definitely covered a lot. I hope that it hasn't been too much information overload for everyone listening tonight. So if anyone does have any follow-up questions, they can always get in contact with us to be able to get in contact. But yes, I think the key message that we like to present to everyone is that exactly, it's always worth asking the question because, you can call us, we can have a quick conversation and easily let you know if there's a claim that you should be making, and we can get that organised.
Perfect. Beautiful. And I will leave your number and details there in the comment section, and your website link for our clients and viewers. So now, really appreciate your time, Kimberly. It's been a great session, and I'm pretty sure a lot of our clients would leverage, and was a very informative session for them. And it's really, really, really a session which was actually a lot of landlords are actually waiting for an update in terms of what they can do, especially right now. I mean, obviously, without going into much details, everyone knows, but a lot of people would be achieving a lot of value out of it.
Yeah, no, for sure. That's the thing, as we've touched on before. Now more than ever, it's important to help claim back as much as you can, and this
Absolutely.
is definitely a good way to be able to do that.
Perfect. No, beautiful. Thank you so much for your time, Kimberly. Really appreciate it.
No, thank you so much.
Beautiful. I will turn that off. And yes, now looking forward for the next session, we'll certainly get some more feedback and organize another one for our clients. And I'll be sending this off to our clients as well, via YouTube link and into our landlord portfolio via email.
Excellent. Look,
a lot of people who were not able to join, especially.
No, look, what I was going to say is, Jazz, just quickly, if there was any sort of particular areas of interest, like talking about older properties versus new properties, or even that scrapping area, we can always sort of prepare maybe some more targeted information
Absolutely.
on that as well. So yeah.
No, perfect. Beautiful. Great. Thank you so much, Kimberly. Appreciate your time again.
Thank you. You have a great night.
You too. See you later. Take care. Bye-bye. Thank you so much, my viewers. Thank you. Really appreciate your time as well.